Now we're going to be looking at the sales receipt, which is the form you can think of and imagine linked to when you do the work at the same point in time that you get paid, which would be like a cash register type situation. Let's jump on over to our flowchart to get an idea. This is the desktop flowchart, but we're in online, QuickBooks Online. It's just that we're using this for the flow analysis because we have these nice, beautiful arrows. Remembering the easiest system we can have would be one in which we have gig work or something. We wait till something clears the bank, record it possibly with the use of bank feeds, which will make a deposit form to record the revenue. And then we talked about an invoice situation where we have to do the work first, like a bookkeeper, a law firm, landscaping, bill the client, which would increase accounts receivable, then receive the payment, and then make the deposit. Now we're at a situation where we're still on a cash-based system, but it might not be as easy as like a gig work situation. In other words, if I actually go out and do work and I get payment at the point in time that I do work, whether that be services or inventory, then I could imagine a situation where I actually get paid in, say, let's say cash. Let's imagine we get the money at the point in time I do the work. I go to the bank at the end of the night. I cash it as one lump sum. I wait till it clears the bank, and then I record it with a deposit form from the bank feeds as revenue. I could do that, but I would lose some of my internal controls over the point of sale that I would have, and I wouldn't be able to track information by customer or by item that I sold, because those are things that aren't typically on the deposit form, rather they're on the sales receipt or invoice form. So more likely, if we're a little bit larger of a business, especially if we're going to be receiving payment other than cash, because we might need functionality to receive credit card payments or possibly transfers and so on, then we might want a sales receipt. So we can imagine kind of like a cash register, similar to if you went to a grocery store and checked something out and you scanned it and you're recording the transactions as they happen. In that case, we would record the sales receipt, and we could take this form and deposit it directly into the checking account. So when we get paid, credit card, cash, transfer to our bank account, we could just put it directly into our checking account in a similar fashion as we saw with the received payment, which is the payment on the invoice that we received, which we saw we could put directly into our checking account. But oftentimes we're going to need a clearing account called undeposited funds, or funds to be deposited, because if I put the money directly into the checking account, it's not going to match what's in the bank. Why? Because when I get cash payments, I'm going to go to the bank at the end of the night and deposit multiple cash payments. And that's not going to tie out to the sales receipts that if I enter them one at a time in the system, making my reconciliation process a problem. If I have a credit card or an intermediary platform financial institution like a PayPal or a Stripe, or then those companies will group the payments together before they put it into my checking account. And once again, I have that problem, and I need to use a clearing account typically to solve that problem. So when I enter the sales receipt, typically it will go into the clearing account. Then I'm going to deposit the money if it's cash at the end of the night, or the credit card company or PayPal will process that information and deposit it into our checking account. And when it goes into the checking account, that's when I'm going to record the deposit form in the same format that will be shown on the bank statement, allowing me to do the bank reconciliation process, possibly with the help and the use of the bank feeds in that case. That will also give me a kind of an internal control over the check register, because I'll be able to tie out the deposit to what I think the deposit should be based on the sales transactions from the sales receipts. Okay, so that's going to be the general idea. Let's go on over to